So right now we're going to move on to stage 2, blockchain and its applications. And I would like to invite on the stage, you heard Peter Todd. So Peter, can you please come up here? Bitcoin Core Dev, associated with Dominic Williams. Thank you. If you could join from Dfinity, Vlad Zamfir. Vlad, are you here? Please. And Vitalik. Please, the inventor of Ethereum. And Henning, you are to moderate us, so please riff off your own keynote, if you can do that. Cheers,
Yeah, sure. So, first of all, thanks a lot of you guys coming here. And I'd like to tell the audience that it's really an honor for me to moderate this panel because we are trying to be non-technical as possible. And that's going to be a total waste because you have the brain power of the Bitcoin and Ethereum community on stage here. And
one more.
Yes, awesome. Now we're going to have to do some sharing. That's
I need a
Can we
mic
do
on
that?
this side. Oh, no, one next one.
Yeah,
One, two.
so that's going to work.
Sure.
Awesome.
Yeah.
Okay, so my first question is introducing yourselves maybe, and I would like to start with Peter, telling us a little bit about yourself and how you navigate, how you found Bitcoin.
Yeah, so right now I do work as a decentralized consensus consultant, and I also go work on the Bitcoin Core software. How I got into there, though, was kind of a bit convoluted. Way early off in high school, I remember reading Adam Back's Hashcash paper, and at the time my dad worked as an economist, and I think I spent the next 6 months bothering him with my crazy schemes to try to turn this into a virtual currency, absolutely none of which had any possibility of ever working. And then many, many years later, of course, around late 2009, I finally read the Bitcoin paper and immediately thought to myself, shoot, that's what I should have done. And you know, my experience was actually not unique there. I mean, lots and lots of cryptographers kind of had that reaction. So, you know, I got interested and kept looking at it and eventually started contributing.
Okay, thanks a lot. So, Vitalik, telling us a little bit about your background and why Ethereum?
I've been in the blockchain, crypto, whatever you want to call it, space for about 4.5 years now. Found out about Bitcoin first from my dad. At that point, I ignored it because I thought it had no intrinsic value. There's no way it would survive. Then 3 weeks later, heard about it again from the internet. I thought the internet's pretty trustworthy. I should probably look into it more. Then got in, co-founded Bitcoin Magazine. Eventually, sort of progressed from spending a few hours a week on it to getting to the point where I realized I might as well just drop out of school and go into the space full time. And at some point about 2 years ago, I realized that people at some point started to realize that you can use blockchains for things other than money, and they started creating these protocols where people are basically saying, you know, hey, you can do gambling on the blockchain. Let's make a more complex protocol with a feature for that. Hey, you can do financial derivatives on the blockchain. Let's add a feature for that. And people were creating these sort of complicated Swiss Army knife protocols with 55 transaction types. I worked for one for a few weeks, so I invented at least 2 or 3 transaction types for it. Eventually, I realized that during the 8 months that I was at university, the one thing that they taught me about was programming languages, and it just naturally made sense that instead of having 55 different, basically instead of having 55 different types of pocket calculators, you might as well have a smartphone. Create a general purpose platform that can support anything, and that's what Ethereum is. That's what I've been working on to this day.
Okay, thank you. Vlad, I mean, if you would continue, how did you come to the field? What's your background? What are you working on at Ethereum right now?
Sure. So I have less of a history in the field than these veterans. I've been working in the field for a little over 1.5 years with Vitalik as a fantastic educator and mentor. Crypto is my addiction. I work on consensus protocols, and I spend a lot of my waking hours thinking about blockchains and the implications and architecture choices and all of the complexities and details that go with it.
Can you describe a little bit what you're working on with Casper?
Sure. So I'm working on a consensus protocol called Casper. It's a proof-of-stake consensus protocol that uses security deposits as opposed to mining hardware to secure the consensus. Basically, These consensus protocols use economics to make sure that an adversary can't overwhelm the network with computers. And the way Bitcoin does this is by using the fact that computers have bounded computational power. Proof-of-stake consensus protocols use digital assets that are defined inside the consensus as the anti-Sybil mechanism.
So what is that addressing? Why is there a need for that?
Yeah. Sorry to get too technical already. It means that the blockchain will have like a much lower electricity consumption in order to secure itself.
Awesome, thank you. So, Dominic.
Yeah, so I first came across crypto stuff back in 1998. I had a startup and I was implementing a certificate authority, and I used this library that I got off the web called Crypto++. It's still available. And it was very, very beautiful C++ code. And I sort of investigated the author a bit, and he was called Wei Dai. And there was very limited information on this guy. But I came across a paper he'd written called B-Money, which was one of the early Bitcoin-like proposals. And I absolutely loved it. But life goes on, and I'd sort of forgotten about it. And then Bitcoin broke onto the news, and I was, this is amazing, this kind of thing's finally come to fruition. So at the time I was running a games company, and I was actually working in sort of scalable distributed computing with scalable distributed computing tech because I had several million users. And I thought, well, maybe this decentralized tech can scale too. And so I ended up thinking about that a lot. And although I now work, I'm a co-founder of a fintech company called String, working with synthetic assets through the Dfinity project. I do a lot of research into scalable blockchain techniques and technologies, and that's why I'm here.
So again, what is that addressing? What's the main problem?
So Bitcoin, to kind of really, although if you're not familiar with the space, it can seem complex. It's really quite a simple system, and it can only process a few transactions a second. So with the current load on the network created by multisig, I think the upper bound is sort of three transactions a second. But if you think about, for example, the Internet of Things, some people predict there'll be 50 billion devices by 2020. And actually, we need our decentralized cloud to process hundreds of thousands or even millions of transactions a second. So there's a very long way to go from the old sort of 2008 iteration of this technology to what it needs to do in quite a short, not too far in the future. My view, having spent a huge amount of time working on this in the area, is that actually decentralized clouds can be made to scale indefinitely, and we'll be able to build pretty much any large-scale IT system we want on top of decentralized cloud. So
Okay,
we'll see.
Thanks. Who here on the panel, before I come to Pavel, thinks or is sure that blockchain technology will be scalable? Show your hands, please.
Like Bitcoin blockchain. Like Bitcoin blockchain.
Define
any blockchain.
blockchain technology.
No, I won't. You can decide.
I mean, I think it's better to say cryptographic ledger technology, because blockchain is one specific implementation.
So did I see
of
that right? It was
cryptographic
3
ledger.
out of 5.
Ledgers are one particular use case of databases.
Okay, I was just trying to understand where we are. Pavel, please introduce yourself, and maybe with a focus, if you want, on what you do using the blockchain.
My name is Pavel Kravchenko. I'm from Ukraine, but I'm a world citizen, so I travel a lot. My background is information security and cryptography specifically. I studied it long before Bitcoin, and I was unlucky to haven't noticed Bitcoin early enough. So I joined the industry only like 2 years ago. But I was interested enough to really dig into it, and I was really excited, and I created like educational course about cryptocurrencies. I've conducted it already 5 times in different universities for free. And my career in blockchain industry started from Stellar. I was responsible for building hosted wallet and researching anonymity questions. And then anonymity interested me the most. And then I joined another startup that was intended to build an infrastructure where you can combine anonymity and KYC at the same time. So I solved this problem, and the outcome is that you are able to provide a proof in an efficient way that you are KYC'd by a certain authority without telling who you are exactly. So it kind of preserves privacy on top of public blockchain. And now I'm kind of looking at space from the perspective, okay, how financial industry can benefit from blockchain technology. So I believe that concept with shared distributed ledger is not the right thing for banking industry, just because of scalability issues. You just can't scale single blockchain to limits that are needed for fintech. And I think that the global consensus is only needed when you operate in anonymous environment, as Bitcoin or Ethereum or Ripple, when validators are anonymous and they don't trust each other. So when you build trustless environment, in case of trusted environment, you need different approaches, and probably you can apply these same techniques, but as a legal in different form. So I'm currently building an open source protocol that needs to address this problem.
Okay, thank you. I have a question that maybe first going to you, to everyone here actually. When you try to explain consensus or blockchain, pick your thing, or cryptocurrency to people who are not technical, one runs into them every now and then. And what is your favorite metaphor to convey in a non-technical way what it's all about?
I usually provide an example with voting. So basically, when we vote for president, for example, we know who is voting, how many voters are, and they actually trust each other to some extent. And we still, like in countries like Ukraine, we still have not very good results with this voting process. And under these assumptions, when we all know each other, we know like amount of people who are voting. So basically, Bitcoin blockchain solved the problem how we can achieve fair voting process under assumption that we don't know amount of voters at all. They are all anonymous and they don't trust each other. And basically the problem is solved. So this is consensus, how we can do that.
Okay, thank you, great. Dominic? Peter?
Yeah, it's a very nebulous thing, consensus actually. It's not easy to explain, and there are very many different ways of achieving it. So Bitcoin achieves consensus in quite a simple way, and it's easily understood by electricity consumption. Satoshi came up with this idea that everybody would try and solve the puzzle, and whoever solved the puzzle, which is solved by brute force, expenditure of electricity, could cast a deciding vote, and then a new puzzle would be set. And but whenever you solve the puzzle, you have to append it to a previous solution. And so what happens is after a while you get a chain, and the puzzles get buried deeper and deeper. And once you've had the puzzle buried maybe six deep, it's you've got a probability of approaching 1 that it's not going to change again in the future. It's going to remain in the chain. So the fundamentals behind Bitcoin are very simple. People race to solve puzzles, and whoever solves the puzzle first gets to cast a deciding vote and append a new puzzle in the form of a block of transactions, or a puzzle solution rather, to the chain.
Okay, thanks. Peter?
I would go and there's really sort of 2 ways I end up explaining. One is to explain kind of how Bitcoin works. And I go talk about, Ledger. I have this whole fancy story I have about, Village, where they all want to have money and et cetera. But I think in some ways a more useful explanation is actually to a slightly higher level, which is to programmers. and people kind of working in the space who aren't familiar with this particular type of technology, which is to really ask the question, what does it take to change a record? And in many other systems that are based on trust, well, to change a record, it's very hard to define how hard it is, because all that has to happen is some people lose some cryptographic keys, and suddenly an equally valid looking ledger appears. And I can be fooled into accepting one ledger versus another, because it is purely based on trust. Whereas what proof of work technology does is it links this back to something very physical, something very concrete, something that cannot be cheaply faked, which is energy.
Can I ask in the audience to please show your hands who feels that he got the connection between proof of work and Bitcoin? Okay, thank
Not
you.
half bad.
Huh?
Not half bad.
So, for the rest of the audience, how would you describe, in a non-technical way, what the connection is between proof of work and Bitcoin? What's the role in Bitcoin of proof of work? Yeah, Dominic had also talked about it, basically.
Well, you know, I mean, again, this is something about trying to prevent a record from being changed. Maybe a somewhat more concrete example is, suppose I want to go and prove to the world the status of my business accounts. And I could go take those accounts and I could go and take out an ad in the New York Times and put those accounts directly in that ad. And if I go do this, you know, every quarterly report, I establish this record that is extremely hard to change. I want to go and fake the records from the prior year. Well, how am I going to do that? I mean, it's in the New York Times. It's in every single library around the nation. Do I go send out secret agents to sneak into those libraries and quickly, you know, change the copies? And that's kind of not unlike what Bitcoin is, in the sense that this very well-defined thing that you'd have to change, which is to run a whole bunch of computers burning a ton of energy to make this new equally valid record. And in the case of the New York Times, you can talk about in terms of physical records sitting out in physical places. In the case of Bitcoin, we can talk about physical energy that's actually destroyed to do something. In the case of conventional computer systems, where like I sign a digital signature, again, if I steal the keys, I can go change it at will. And it's not really clear what does it take to do that.
Okay. Vitalik, a metaphor for blockchain, crypto, whatever.
And I actually just like our lead developer Gavin Wood's phrase, the world computer. So, you know, it is this sort of magic computer in the sky, and in the 20th century, you would run a program on a computer, and in the 21st century, you would just run a program. And you don't really need to care about which computer it's on. It's sort of just running in the sky, and you know, everyone sees the program running, everyone agrees on the outcome, and it just so happens that that's an incredibly convenient way of building many kinds of interesting things.
Thanks. Vlad.
So I usually like to say that the whole question is kind of confused by the fact that Bitcoin invented two things: a type of consensus protocol and a way to make network resistant to attack in a public way, which I call economic consensus. So what I like to focus on is the fact that Bitcoin uses digital assets that are defined inside the consensus to secure the consensus. Now that requires you to already know what consensus is.
You feel that's a metaphor?
No, I don't feel that that's a metaphor.
Okay, let me ask the question again.
I'm quite bad with metaphors.
Oh, really?
Make a simile.
So
you can pass.
I can just say that a blockchain is like coming to agreement.
You had such a long time to think about an answer. I'll ask you that again. Okay, so real quick maybe, Vlad, you first this time. What for you is the most important application for blockchain technology? Just one thing thrown out there, and then Vitalik is next.
Sure, I think censorship-resistant access to information is the most important application of blockchain.
That sounds more like a building block. What's the concrete application? Something real that can be done with it.
And you want to, I mean, so for example, it's really
I'm amazed you even have a real buddy. Come on.
I mean, I like to be very general, but basically, imagine being able to find any file and be able to download it from a decentralized internet for like a small fee, as opposed to having to trust centralized parties.
Like in BitTorrent.
Like in BitTorrent, only with the quality of Napster.
Okay. Vitalik? What's for you is the first thing or the most important thing that you feel is worked out as an application with blockchain technology?
One of my sort of phrases that I've used a lot is basically that blockchain technology has no killer app. And what I mean by that is that I think that if there is sort of one particular pathway that this kind of technology could use to generate sort of trillions of dollars of value for very many people, then there would realistically be a kind of specialized centralized service with sort of trust anchors along the way that does it already. So I think where the benefits that we're really going to see are things that are kind of more subtle. So imagine kind of the difference between programming languages in the 1980s and programming languages now. There's nothing that programming languages now can do that programming languages in the 1980s can't do. But there are plenty of ways in which they're moderately more convenient. And I think in general, this idea of running applications on this sort of public world computers basically means that, first of all, there are many opportunities for different groups to run operations that interact with each other, and they can interact in a way where they can completely trust each other. It's a kind, there are many kinds of digital assets that you can put on one of these, put on a world computer. You can make financial contracts off of those assets. You can kind of link assets together, trade them, buy and sell them. You can record events. You can potentially make contracts that move assets around conditionally on particular events occurring. So it's these sort of very subtle sort of combinatorial benefits that come from sort of to a medium extent from very, very, very many places once we see kind of lots of things in the ecosystem at the same time.
I'll try again to ask for a very concrete application that is the first that comes to mind. It doesn't have to be important or you don't have to defend it, but what's the first real application that comes to mind?
Let's face it, buying drugs over the internet. And what's interesting about that is there's really two flip sides to blockchain tech. And I think one of them is permissionless innovation. And believe me, being able to buy drugs over the internet is certainly permissionless. And if you are one of the dealers, you're certainly going to call it innovative. And then the other half is really actually pretty boring stuff about just better security, better auditing, better processes. And it's quite interesting how you kind of have this tipping point. And I think we kind of saw this in the development of financial tech, where we had better and better and better crypto, but it was always still based on trust. At some point, we always had a trusted third party who ultimately called the shots. And if they failed, all this fancy crypto was useless anyway. No matter how many digital signatures we throw at the problem, we're still trusting them. But you get to a point where you can remove that trusted third party, and suddenly the whole paradigm changes. It's the last little step, but that's the difference between a system that's just a better audited bank and a system that lets you do things that authorities don't want you to do.
Dominic?
Well, as a co-founder of a fintech company, I hope that we can do better than, enable drug sales. But no, I mean, more generally, I think Vitalik covered a lot of the applications I would have mentioned, but more generally, I think
and more concretely,
the hidden benefit of open systems is their openness, and I'll explain why using a story from Palo Alto. There was a company I won't name that grew very successfully. They were a kind of CRM product, and they looked inside your email box and they could draw all kinds of organizational maps. Anyway, the product depended upon the LinkedIn APIs to work, right? And this company was going to be a unicorn. It was going to be worth billions of dollars. And then all of a sudden, I think it was about 6 months to 9 months ago, LinkedIn changed the rules governing access to its API, and they decided the only people who could access the LinkedIn API were Microsoft and Salesforce, right? And all of a sudden, this company that was going to be a unicorn and going to be worth billions, was in a bind. You know, its whole product was going to fall apart in 3 months. So actually, it did okay. It managed to sell itself to Salesforce, but it didn't sell for the billions that it thought it was going to be able to sell itself for. Now, if you think about the decentralized cloud, because in the future we'll be able to implement anything in the decentralized cloud pretty much. So we can have a Gmail, we can have a LinkedIn. Now, if you were a business, would you prefer to build on top of an open LinkedIn, right? Or would you prefer to build on top of the closed proprietary LinkedIn that might capriciously change its mind at any time in the future, seek rent, do some deal that you couldn't predict, and just put you out of business? So I think the reason that the decentralized cloud will win is that it's an open, transparent system, and once people can see that working, they'll always prefer to build on top of that rather than use proprietary systems that are run by individual companies.
Thank you. Pavel, as concrete as possible, what is the one thing that comes to mind
It will
on
be
blockchain?
pretty obvious. I think that killer app for blockchain technology already exists. It's money. It's Bitcoin itself. As a currency or digital asset, a digital gold. And we all use it. The next one will be public infrastructure that is much better than existing one. And the next thing will be like permanent storage of financial history. Not only financial, but just recording of facts. That's it.
Okay, cool. What is the opinion here? I mean, I was on a hackathon. I was mentoring participants on a hackathon, and everybody there chose Ethereum. Now we have a diverse panel here. What do you feel is the most important blockchain right now, Pavel?
I'm going to answer first and say Dogecoin.
In terms of innovation and money that is flowing, it's still Bitcoin blockchain.
Okay, Dominic?
Ethereum, because Bitcoin is just a special case of a decentralized system. So it's much better to build a general purpose, decentralized virtual computer, and build all kinds of different things on top of it. It's trivial to implement cryptocurrency on top of Ethereum. So why do we need Bitcoin? And so I think that the innovation in the industry now is happening in the Ethereum space. And
Peter,
so
what do you think about that?
I think you guys were all arguing about making better telephone systems. I think the real innovations to not put the logic in the system itself, but rather put the logic on the client side and make the actual decentralized consensus part as simple as possible. And to that extent, I would say Bitcoin's very nice because it is dead simple, and it works, and it has tons of money and computer power behind it. But that's not really the reason why I said that. It's because I think you can make very good systems where Bitcoin is not the thing that runs the logic.
I'll rephrase the question for you. Do you think there's good use for Bitcoin in an Ethereum world?
Well, the digital gold use case, I think, is certainly something that's going to keep popping up again and again. There's always a chance that some other country is going to go into hyperinflation. We'll see negative interest rates in the Eurozone, capital control somewhere, and there's clearly a need. People clearly have a demand for some kind of asset class that's a hedge against political risk. So far, that's been gold, but who in the future could, I think, if Bitcoin establishes trust in a couple of decades, that easily could be it. So as far as things that are more complex goes, I think technology is just going to continue improving, and the systems that win are going to be the systems that are most capable of being friendly to ongoing innovation.
Yeah, so I definitely think that Bitcoin is better for transmitting value over the internet at the moment than Ethereum. And I think that Bitcoin is a really, really great educational example because it's a protocol that almost anyone, if they spend a day start wrestling with, will be able to understand. And so it provides a really great gateway to wanting to use blockchains. And then Ethereum is great because it's easier to use. And ease of use, I think, is really important for the rate of innovation.
So if you come to an application, a concrete IoT application, who here would feel comfortable to have a lock at his door that is controlled by blockchain?
What kind of blockchain?
So as long as the lock on the door checks the blockchain before it downloads a software upgrade and is fully certain that the software upgrade is getting is not tailored to my door, then I would trust it.
And you have a backup key, physical one.
So aside from the no killer app thing, by the way, another sort of popular opinion that I have is that I think no blockchain that is currently exists is sort of good enough to satisfy like national scale usage for hundreds of millions of people, and that's basically because of the every computer processes every transaction type of scalability concerns. So I think even from a technical standpoint, there's still quite a bit of a roadmap to go before we can really start sort of rolling IoT out into every car in Hong Kong or, God forbid, mainland China.
I mean, I'd make the point that I think a lot of interesting Internet of Things applications don't need consensus. One of the more interesting ones I've actually seen recently is, funny enough, from agriculture, which is, in many places, a wild boar. And they're kind of annoying because they go dig up your fields and eat all your plants. And, well, what do you do about them? Well, why don't you go and put a trap and capture them? And what people end up doing is they go put these massive traps that, funny enough, I mean, I remember watching the YouTube video and it's like halfway through, okay, this is kind of interesting. And there was, wait a second, they're using a cell phone to go get live video the moment a motion sensor triggers, to then figure out when's the exact right time to trigger this trap. It's like, hang on, that's actually Internet of Things. That's actually this really useful application. And it's not implausible to imagine, well, why don't we go outsource the human task of looking at the live video and figure out when to go hit the button and make the trap falls down and capture all these animals. And it's like, that actually makes a lot of sense. This is actually a valid use case that people pay a lot of money to implement, but you need consensus now. And if you don't need consensus, you don't really need blockchains. In terms of things that do need consensus, I think Vlad actually had a great example of something that actually does make sense, which is validate software updates. But, I think the overall Internet of Things story is not going to be that much about blockchains. I think it's going to be something much broader than that.
Dominic, the original question was about door locks.
I think decentralized cloud technology will be almost unrecognizable in 5 years, and we'll have no concerns, or probably far fewer concerns, about running your door off it.
Okay.
So
cool.
you have to look forward a little bit, but I don't see there's going to be a problem in a few years' time.
Pavel?
I think the problem is not the technology, but rather like usability and human interfaces. So we already have a lot of technologies, but we just don't use them because they're too complicated for humans. So the challenge, as I see, is that to make them really understandable for your grandma, so she will not die because of starving in front of fridge. So
That's an interesting point. I mean, so you're saying basically we have the technology, we're just too stupid to use it.
no, just easy enough to use. Easy
It
enough
has to be made
teach.
easier. There has to be education.
Yeah.
That's, I find that interesting because I think we all agree that we're early. But as a last question, maybe, how early are we? I mean, do you agree with Pavel that we have the technology? It's just about education now.
No, I think blockchain technology has got a way to go before it's a sort of robust, decentralized cloud. But I think it'll happen in the near future. I don't think it's that far out, but yeah, it'll come. But not probably. It won't take nearly as long to arrive as many people think it will.
I think the state of software security is terrible right now, to the point where, Internet of Things is frankly unimaginable, in the sense that you would end up in a scenario where millions of fridges around North America are DDoS attacking your server because they haven't been patched. I mean, we just don't have the ability to write good enough
Sounds like
software.
fun, though.
Yeah, and equally, I mean, a lot of these other things with finance, we actually have the ability to have immutable ledgers that mean financially relevant things on a wide scale, because there's so much fraud going on that we would reject that in favor of the current systems where we can reverse transactions. You know, when things go wrong, we can reverse, and we can reverse indefinitely. And I think it's going to take a long time before we get the computer security to a point where we actually feel comfortable with that.
Can I just add something to that? There's an important point there. So one of the advantages of decentralized cloud technologies is that all of the computation is costed. You have to pay for it. So when you make a Bitcoin transaction, you have to pay for the Bitcoin transaction. When you make an Ethereum transaction, you have to pay for the Ethereum transaction. So that greatly reduces the vulnerability to DDoS. So you might have a device that goes crazy on the Internet of Things, but it's going to have to spend a lot of money to keep on sending these transactions to the decentralized cloud. So that's an important distinction between, you know, a traditional decentralized system and a decentralized system.
I mean, I'll concur with the general thought that user-side security is definitely a problem. I mean, that said, user-side security has been a problem with the internet for 20 years now. And I think one of the interesting things about blockchains is just the extent to, like, the general sort of Internet of Value vision I think that some people have with regards to blockchain technology is this idea that, there are things that, the general category of things that are information and are valuable is much bigger than the set of things that we would traditionally consider to be, say, financial instruments. Like, you also have domain names, advertising space, accounts, different kinds of information, virtual property in video games, and there's so many there's so many different classes of it. Right now, each one of them potentially have their own accounts. Potentially, all of them are backed by some particular email accounts, which has the right to reset the password, and that account is controlled by Google. And so, I think with the blockchains, like, the idea is that you could potentially have one private key that you can use to access everything, and sort of really properly kind of abstract away the identity level from the application level. And then at the identity level, hopefully, you could use smart contracts to sort of create whatever kinds of security policies you want, whether it's one private key, whether it's 3 out of 5 private keys, whether it's 1 out of 7 private keys for one action, 4 out of 7 private keys for other kinds of actions. And once you have the problem sort of that neatly encapsulated, I think we're definitely going to see a substantial amount of innovation in sort of security-specific access, or like sort of general-purpose blockchain access control technology, and I'm excited to see where that field's going to lead.
You want to add something to that, Vlad?
Yeah, sure. I just want to say that I agree with Vitalik and with Peter, and I think that actually we can use blockchains to make endpoints more secure by doing things like certificate revocation and public key infrastructure to make it much more sure that the communications you're having are with the party you're intending to have and not with some hacker who's compromised them.
Shall we ask question to the audience?
Yes, I think we've got a lot of hands up here. What we're going to do now is open the floor, because we have the brain trust both on the floor and in the room. And Constance is going to man this side with this mic, if I may, and I'm going to manage the mic on this side, starting with the gentleman at the back.
Hi, my name is Joseph Wang, and I am probably, and I will claim until somebody contradicts me, that I wrote the first smart contract that's used in the business transaction. So to get to the issue of applications, there are applications right now that are screaming to be used for blockchain technology. One is, for example, 24/7 stock trading. Right now, you cannot trade stock at 3 o'clock in the morning, and the reason you can't trade stock at 3 o'clock in the morning is because right now all the systems require, of all the markets in the world, require you to shut down the market and pass information back and forth. The only asset that's traded 24/7 throughout the world right now in a single market is Bitcoin. And that's because you've got blockchain technology. So if we want to go to 24/7 trading of everything, we need blockchain. Second thing, GPU markets. Right now I've got a cell phone. If I want to buy, this cell phone gets old, I have to buy a new cell phone with a new CPU. What you can use blockchain for is to offload all the CPU stuff onto the cloud, and that way I rent my I rent my GPU. If I want more GPU, I want more compute cycles, I just pay some extra Bitcoin. Third thing, flexible loans. Right now you go to a bank, you've got a 15-year-old mortgage, you say to the bank, well, I want a condition that if I lose my job, then I don't have to pay the mortgage for about 2 or 3 years. Right now, banks can't handle that. And the reason why I went to smart contracts is that banks can't lend to small businesses here in Hong Kong. So I just wanted to bring this up because there are applications right now that must be put in, and this is why this technology is important.
I would make the point in the case of your first example there that as far as I can tell, I can use my Visa card 24 hours a day, 7 days a week, 365 days a year. And the back end of that's not blockchain. You know, it's not the lack of blockchain tech that's really preventing this. I think it's a lack of a lot of other things.
No, it's an illusion, because what happens when you do the Visa right is that the Visa company issues an IOU to the merchant. And this is actually what happens with stocks, is that when you trade a stock right now, nothing gets transferred. It's an IOU. The problem with that
Okay,
is...
let's see what our experts are having to say to that. I think we can agree there's the actual business, there's clearing, there's settlement.
I mean, this is definitely an interesting question, I think, to explore more, because it's definitely not true that Bitcoin or cryptocurrencies are the only kind of assets to be traded, even in a financial context, 24/7. Like, I'm sure there's plenty of, video game virtual currencies that get traded 24/7. There's you can buy and sell domain names 24/7 and many other kinds of online assets. So my hunch is that the reason why that doesn't exist for stocks yet is more institutional than technical.
Okay, but there's the clearing time. We just see...
Well, clearing time for some of these virtual currency exchanges is probably like under a minute as well.
Exactly. So we're not here really in a fintech panel, but this is the promise. And Dominic, maybe you want to say something how settlement can be abbreviated.
Sure. So I'm kind of linked to the banking efforts to create settlement and clearing systems. But my startup I'm a co-founder of, called String, is addressing the 24/7 stock trading challenge by creating synthetic mirror assets, if you like, which represent things like Facebook stock or gold, and those will be tradable on a secondary exchange 24/7. And there will be some limited liquidity outside of normal market hours, but once these synthetic assets have been created, they can be traded ad infinitum round the clock. So a lot of the stuff's being worked on. I also know that there are other companies out there looking at some of the consumer derivatives opportunities, such as P2P lending, kind of swaps, gas price hedging for commuters and things like that.
So I have a question. I've been told to ask a question. So now, two quickies. One is you said that blockchain is great, but without Bitcoin, it is neutered. And yet, what we know about Bitcoin is, number one, the FBI, central banks, law enforcement agencies hate it and want it to go away, and will do just about everything in their power to get rid of it. And number two, how on earth can $175 million of Mt. Gox still be missing if blockchain is so reliable?
I just clarify what I said. I said if you try to take the concept of, however you call it, cryptocurrency, virtual currency, digital assets out of smart contracts, you neuter the power of smart contracts. You still can do a lot of things, but the actual power of smart contracts and an automatic market and economy, that's what you are doing away with. And most of all, it's just people try to rename it and create even more confusion. Well, there's already enough confusion out there by trying to make a difference between cryptocurrency and digital assets. That was my point. For the 1 and 2 parts, I would like to hear Peter's opinion.
Well, in terms of the idea of how can this go missing if it's so reliable, the way I go describe it is really, well, what kind of reliability were we expecting? As an example, consider gold, for instance. In terms of can gold be counterfeited, it's extremely reliable. It is gold. I can do a test. I know it's gold. And it's the basic laws of physics that prevent me from counterfeiting gold. Yet at the same time, if I go give gold to a trusted third party and they steal it, it's still stolen. There's nothing I can do that changes that type of reliability if the implementation of the first type of reliability is a piece of metal. Similarly with Bitcoin, the underlying blockchain does not give you any guarantees about where the money goes after you give it up. It doesn't give you any guarantees to be able to go follow the trail. It's if you use it the right way, it's extremely anonymous. In the case of Bitcoin, well, people gave money to Mt. Gox, and Mt. Gox stole the money, or lost some money, or who knows what happened, but you can't necessarily track it.
And also it's still there, right? Somewhere in the blockchain. So, to Pavel and Dominic maybe, what about FBI hates Bitcoin?
They own Bitcoin, why do you hate it?
They're selling the last
they're selling it.
44,000 units of it next week, so.
Yeah. Go ahead.
Yeah, I was saying they're actually selling their last 44,000 units of it, I think, next week.
That they confiscated from Silk Road.
Yeah, so I think starting next week, maybe in 2 weeks they're gonna make a bunch of announcements and basically ban it. I don't know.
So they confiscated money from a drug trade and are selling it now.
Yeah. Sorry, didn't some FBI agents steal some of the Silk Road Bitcoin? Right?
Yeah.
Yeah. And they found it too. Yeah.
I would make the point, the FBI has said they hate encryption. Because the FBI hates something, it doesn't make it bad. Their goals are not necessarily aligned with your goals. And to the extent that it means that you shouldn't be involved in Bitcoin, well, same way as, when you go use encryption. The fact that the FBI doesn't really like that, does it mean you shouldn't use it? Well, it's, just a negotiation with political power, et cetera, et cetera. We as a society seem to have come to an agreement that overall we can't backdoor encryption because we don't know how to do it safely, and we never will. And we negotiate that with the powers that be in society in general.
As far as crazy crypto-anarchic anonymizing technologies go, it's worth noting that 60% of the funding for Tor, the sort of famous online darknet project, comes from the US government.
Do we have another question?
Yeah, quick question. Dominic, you mentioned setting up synthetics to trade a variety of products. I would be interested on the opinions of the panelists on whether those synthetics should be subject to regulation by regulators in jurisdictions like Hong Kong, the United States, or the UK.
Shall I answer first? So my kind of view is that the decentralized cloud is kind of extra-jurisdictional. It doesn't have a geography. And therefore, it's not a productive route to expect every regulator in every country to develop its own regulations on the same thing that sits in the middle, right? So regulation has to be pushed to the edges, and what that probably means is that in order to get access to these synthetic assets, you have to go through some kind of KYC or other provider that is subject to the regulation of the jurisdiction you're in. So if you're in America, you'll have to go through some intermediary company in America. If you're in Hong Kong, you'll have to go through some intermediary company in Hong Kong. And those companies will be subject to the regulations of the countries where they're located. I can't see any other way that's going to work.
I have a question there. What I understood is that you're basically creating mirror images of actual existing assets. So the actual existing assets should be what's regulated, or not?
No, they're not. No, it's not as simple as that. So these are decentralized tokens whose price will, with a very, very high degree of certainty, follow the asset they mirror, right? But there's no mapping. They're not colored coins. So there's no mapping between these decentralized tokens and some stock that's held for you by some party. Yeah.
So I would go make the point that if you claim you're regulated, I definitely want to know whether or not you actually are. And I don't want you to be able to lie about that fact. Because after all, if I'm buying into these synthetics, I want to be absolutely sure that if I think it's regulated, if I think you're not a fraud artist and there is a regulation environment that protects me, I want to know if that's true or not, and I want to have absolute assurance. Equally, if I'm choosing to go and trust you because you're some shady guy on some Tor site on the dark web, I can go choose to do that, and I'm okay with that, being a bit of a libertarian, but I certainly should know that, and I certainly should be in a position where I can find out that accurately. I don't want to be in a position where you claim you're regulated and you're actually not.
Another question?
Hi, gents. It's Hugh from ANX. I've got a question kind of actually a little bit slightly more technical. So as an engineer building low latency trading systems for decades before being in the blockchain space, I can say that the trade in question actually would have a higher priority. Time is money, you need to be sub-millisecond. So the characteristics of the solution you're looking for is that actually prioritises speed over trustless and decentralised and everything else. So what we're talking about here is architectural patterns. Normally, an engineer says, what problem do I have? What characteristics are the most important? And then selects a suitable pattern based on that. Now, the blockchain can be thought of as a very sophisticated pattern. Sure, it's technical, it also brings in economic incentives. However, it's still a pattern. It's a very good tool for certain problems. Now, most engineers in the room would know of a thing called model view controller. It's a famous, simple but famous pattern. Everyone knows it. One of the reasons it's famous is because thought leaders went out and educated in academia and everywhere else. They documented how the pattern worked, what problems it's good at, and what problems it's bad at. Now, for the blockchain pattern to become very popular and ubiquitous for those jobs where it's good, who is leading that? Have you seen that? Who are the leaders who are actually just teaching people what it's good for, how it works?
Yeah, I would like to answer here. I mean, interesting about model view controller, it's kind of a meta pattern. It's a pattern of patterns. And of course, patterns emerged in IT only over time. After people had recognized certain patterns to reoccur, they were able to give them names, write books about it, and start to talk about it. And I think we're seeing the same development in the blockchain world. And we're also having the same kind of, we're having a very confusion situation there that just Bitcoin itself is also a meta pattern, so to say, using a couple of building blocks that are now labeled in confusing ways, where sometimes somebody is meaning also that building block and somebody else is insisting no, in his definition that building block's not part of what blockchain is. So I think the discussions that we're having here, and actually the workshops that COALA had over the last workshops, is exactly where these kinds of communications and this kind of terminology is being developed. There's also, of course, in the Ethereum office in Berlin, the wider Ethereum community, as well as the older and more experienced Bitcoin community.
So, in terms of this kind of notion of patterns and requirements, I usually go talk about security software in terms of what does it prevent from happening. Now, in the case of your work with trading environments, obviously you're not that worried about preventing certain things happening to the extent that you're willing to have solutions that, for instance, aren't cryptographically signed. I've seen the details how some of these very high-speed trading environments work, and essentially if someone gets into the secured room where all this data is flowing through, they can do pretty much anything they want. And they can get away with it if they have enough sophistication. Whereas in a security, sort of more security engineered environment, you're saying, all right, I want to prevent this, I want to prevent this, I want to prevent this. And I'd say in general, as to this idea of thought leaders, well, maybe I'm a little biased here, but anyone who talks about what are we trying to prevent with the security technology, to me, automatically, kind of has a lot more trust, in terms of whether I'll go listen to them. And currently, I think the Bitcoin core devs have mainly discussed this, and it's probably fairly easy for them because they're not talking about very exciting things. They're talking about very simple software that does things very robustly.
Hi, Nick Studden-Wilson here. I'd like the panel just to help me understand the concept of consensus, because to me, consensus is very, very woolly. Does consensus mean 51-49? Does it mean 70-30? Is it important if 49% is a minority, but they're all in agreement? How does a computer system, how does the blockchain think about consensus?
Okay, it's just the longest chain rule. So whoever is faster to create blocks, those is right. So with Bitcoin blockchain, it's very simple. It's speed of computations. And if we come to proof of stake, I think Vlad will answer in a better way, but it's about who owns more money. Those will vote fast. Yeah, kind of. And if we come to consensus that is reached between semi-trusted parties, then what matters is basically amount of signatures that is put under some decision or some transaction or some block. So with every model, you have different like security considerations and requirements.
Yeah, so there's two kinds of approaches to talking about whether nodes have consensus. One of them is whether or not they share the same state for the application. So if they all have the same copy of the thing they're trying to keep consensus on, then we can say that they have consensus. Another one is this idea of common knowledge. The idea that not only do they have this shared state, but they also know that everyone else has the shared state, and they also know that everyone else knows that they have the shared state, and so on. So, and another important concept is this idea of fault tolerance. Given, to how many faulty nodes, how much misbehavior can we have before we lose this guarantee that everyone knows they have consensus, or this guarantee that everyone has the same copy of the state?
I'd go point out that I think some of these explanations may come off as a little less clear than the actual situation is, which is that, first and foremost, the rules of the system, as in what is a valid transaction, what moves money from point A to point B, those are set in stone. That's just software that everyone runs. There's no question about consensus of that, except for kind of woolly social consensus ideas of, how do we make the rules of the system in general. But once you agree on those meta rules, the actual process coming consensus is very simple, very deterministic. I run the software. This transaction is correct. This one's invalid. There's no question about it. The only thing you have question about is, well, did I give the money to her first or him first? And that's something that miners or proof of stake or other systems can determine. Now, it may be very important if he thinks he got the money first and she thinks she got the money first, and a week later the state of the system has changed. But that's like this part of consensus. All the other stuff, all the rules, all the procedures, that's all set in stone, and there is no debate about that.
Okay, so can you please put your hands together for the very first panel, blockchains and applications. You guys have done a stunning job. Please, could I invite you down? Danny, you're going to